What's happening? What's happening? What's happening, everybody? I already got the screen up and everything. What's going on? Y'all go ahead and pull up, and get myself together over here so we can go ahead and start everything. 1 second. 1 second. Okay. So, if this your first time, what's happening? What's happening? What's happening, everybody? If this your first time pulling up, I like to start off by saying welcome. If it's not your first time pulling up, I would still like to start off by saying welcome and thank you for always, pulling up and supporting. Shout out to everybody from the gang. Y'all see Spidey back here as usual. Let me wait a minute. Why is that? I just saw something said something was under review. I don't know why I said it was under review. I really don't know why I said it was under review. What's going on, man? YouTube be tripping sometimes. But anyway, like I was saying, man, if you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day, 9 a.m. East Standard Time, 6:30 p.m. East Standard Time. But during football season, we doing 7:30 p.m. East Standard Time to talk about the price action. Let me put got my banner up, get my banner together. There you go. I'm all over the place. First and foremost, we talking about the price action recap, the price action recap for September 22nd, 2022. Yeah, man. All the pleasantries dropped out the way. Hit the like button, please. That's all I ask you to do. I do a free 99. Everybody already know that. Let's get right into it, man. Did y'all pull up with anything y'all want to talk about tonight? What's up, Stacks? What's going on here to learn and share? What's going on, Hines? Sonya, I don't know why it's got your comment blocked. What's up, Kareem? I hit show. All it says is what's up, family. Like and share, please. I think because it got like and share on there. Maybe it don't like that. I don't know, but I hit show comment and it but it's not show. I can't see it in the chat over here. I don't know if you can see it in the YouTube chat, but what's up, Tanya? I see more numbers, I see more names than I see stuff in the chat. So I guess don't nobody want to get shouted out. Let's get right into it. Y'all, I pinned the link at the top. If anybody want to pull up, click the link. If you want to pull up and ask anything, you want to pull up and share anything, I don't mind. If you really want to talk to me, I don't mind. Y'all know where that come from? Y'all know where that come from? You probably don't. Let's get into it, man. Let's look at the price action. Let's talk about the price action. As y'all can see, I have adjusted the boxes. I have adjusted the boxes. Look at the boxes, how I adjusted them. I adjusted the boxes. As you can see, I have adjusted the boxes. If I shrink this down, right now I've changed it a little bit, try to make it look a little less congested. Now the top and the bottom of the monthly box is at the September 13th high. On the SPY, it's the September 12th high because we had that's that day when we had it sold off drastically, going into the 13th right before the market opened when it went down, baby, Yo Street in the Range Rover. So it's the September 13th high on the ES, but it's the September 12th high on the was it changing faces or cut close? Was it changing faces or cut close? Might have been changing face. I don't even know, to tell you the truth. Now I got to go look it up. Now see what you done did? You done got me off track. Cut Close featuring R. Kelly. Keith Sweat, I said R. Kelly. Cut Close featuring get up on it. Keith Sweat, get up on it. Keith Sweat, get up on it. Cut close, get up on it. It ain't get up on it. That's all coming up for cut close. I guess it wasn't cut close. Changing faces. Change the face feature. Keep Sweat. List to stroke you up. Change the faces. That's it. Yep. Change the faces. That was it. Stroke you up. Change the faces. I know it was two ladies. It was change of faces, not cut close. I knew it was two ladies though. So change of faces. Do you mind if I stroke you up? Don't mind. And cut close was get up on it with Keith Sweat. Keith Sweat was the man back in the day. He was making music with everybody. Okay, back to what we were saying. Squirrel. Yeah, I jolly pies for that, man. Y'all know how I do. The monthly top and the bottom is now the top of the box for the monthly box is September 13th high at 4187.50, and the bottom of the box is June 17th low at 36.59. Right, that's the top and bottom of the box. The top and bottom of the weekly box, the box inside the box is I don't know the date because I don't have it marked. September 20th high at 39.36.25, and July is July low. I can't get back that far. I ain't got enough time. It's July low, July 14th, I think it is. July 14th low at 43.75. That's the weekly box inside the box, right? And then the daily box inside the box. Now, I mean, that's the that's the weekly box, right? Because it say buy side liquidity WK, that stands for week. Buy side liquidity MTH, that stands for month. And then buy side liquidity DA, that stands for day. And the daily box inside the box is, let me stretch it out. Today's high at 38.33, and today's low at 37.63.25. Those are the new box layers. That's our new box inside the box. I adjusted it to make it make more sense in the trading range that we going through. You know what I'm saying? I got rid of all those other trading ranges because we pushing further and further down. So I wanted to be realistic based off of where we're trading at now. And then you can see I only have the intern. Well, I got some internal liquidity marked on the weekly box. I was gonna say I only got, but so I got some internal liquidity way up there at yesterday's high at 39.25, and then the internal buy side liquidity is at the afternoon high that we made on the 1600 candle just before close at 38.05, and then the morning high just before the 9 o'clock open. I was gonna put it on this high right here at 6 o'clock, but I just chose this swing high right here, since this swing high was the daily top of the daily box. I didn't want to use this candle. I wanted to use the swing high, and it's just a stone's throw away, because the buy stop's gonna be resting above this swing high and this swing high, and I didn't want to just pick a random candle, you know what I'm saying? So that's why I picked that swing high right there. So those are all the buy side. Oh, and then we got some sell side liquidity, internal sell side liquidity at 37.66.25. As you see, well, let's get into the price action. So at the open, let's go down to the 15-minute candles. Right, so on the 15-minute candles, from this red candle right here that I'm moving the mouse around, the one with the super long wick. This is the opening candle, right? The 9:30 opening was at 37.95.50, right? So we opened up at 37.95.50, right? We pushed up into this fair value. Let's see which direction we went first. I can't remember. I think we went up first because I was running my mouth and said I had missed the short. I just heard myself smack. And my wife told me I'd be smacking. My mom used to tell me that all the time too when I used to be on live. So we pushed up first, right? We pushed up and got into a 15-minute fair value gap and then sold off. We had a breaking structure prior to the market open, right? Had a breaking structure, right? Well, first we ran buy side liquidity. Boom, ran the buy side liquidity. Once you run the liquidity, that's when you should be looking for the reason to go the opposite way, right? And then we ran the buy side liquidity prior to market open, right? Came down, got a breaking structure. We got a breaking structure on the 9:30 counter, the counter just before the 15-minute counter just before market open. Market open, we traded back up. If you're a breaking structure, fair value gap retracement trader, and you take it off the bottom of the gap, then this was your short. If you're a breaking structure, fair value gap trader like me that take it at least 50% of the gap, you wouldn't have got picked up on this short. You got missed, right? That was the short of the morning, right? When we was talking about that, I was saying when we came down and we took out, I can't remember what the sell side liquidity was. I think it was here. I think the sell side liquidity for the external box was here, was down there somewhere, and we had some internal sell side liquidity here at 37.77, and the bottom of the box was down here at 37.66.75, right? So we came down, we took this sell side first, and I said I wouldn't be interested in us coming back up to this fair value gap to take a short, because we had got so close to the bottom of the box. I was like, we done got too close to the bottom of the box, and if we came all the way back up there, I wouldn't be comfortable taking a short down there, because that would, push us too far up. That'll push us too far up to the upside, right? So that was the short that we had missed, right? Then we retraced back to the breaking structure on the 15-minute, back to this fair value gap right there. From the 9 o'clock open to the bottom of that right there, that was a 62% retracement to go in. I couldn't take that trade there because it was outside my risk tolerance. The top of that, down to the gap, that was outside my risk tolerance, and plus I was watching this fair value gap up there too, so I wasn't really interested in taking it short. But if that fits your risk tolerance for a breaking structure gap retrace, that was the second short after the market open right there. If that was your trade with the risk tolerance above this up close candle right here, above this swing high right here. Then we went into a whole bunch of nothing throughout lunch, right? We went through a whole bunch of nothing throughout lunch, and then we still had not taken the right there. We came really close. What's this low right here? 37.66.25. We got below it right there at 230, right? So we got below the external liquidity at 230. Poke just below it at 230, right? And then after poking through it at 230, we pushed back up, took out the buy side. So we took the external sell side poke, just barely poked out of it, took the external sell side liquidity on the 230 candle. Then we pushed up and took out the buy side above all of these highs. We had been making lower and lower highs throughout the entire day, right? And then we came up and took all the buy side at once, right? Once we took all the buy side, we pushed down to this fair value gap, this 15-minute fair value gap. And let me jump back up to an hour, right? looking at it on the hour, we had an hourly fair value gap sitting up here, right? Let me mark the line right there. This the bottom of the hourly fair value gap right there. This the top of the hourly fair value gap right there. And then let's go back to the 15-minute. So, right. So we ran the buy side liquidity, right? Got up into the hourly fair value gap, set a relative equal high, sold off, came down into a 15-minute fair value gap right here, right? Once we hit that 15-minute fair value gap, right, we came over, and on the last 15 minutes of the day, we pushed up, took out this buy side liquidity above the fair value gap, took out this buy side liquidity. Let's check this on the overall run over this overall move. Let's see where that is. Moved into a discount, right about a 62% retracement. Equilibrium was almost at the top of the fair value gap, pushed up into a discount for the entire move from this high all the way down, and then dropped it like it's hot, right? But stop just short of the this is the 11:30 candle. So we took that sell side at 11:30. I said we didn't take it until 2:30, but we took it at 11:30. We took the sell side at 11:30, and then we didn't push back up until 2:30. But all these relative equal lows we were setting right here, we poked below them, went up, then we came back down and stopped just short of this sell side liquidity right there. And now that's where we are. That's where we are. The market is still looking super duper heavy. It's still looking super duper heavy, right? And the reason why I say that is looking at the 1 hour, right? Matter of fact, let's go up to the daily. Let's go up to the daily. Looking at the daily, right? This is the daily. On the daily, the market is looking super duper heavy, right? Looking at this week, this is Monday. Well, we got Friday there, but this is Monday, this is Tuesday, this is Wednesday, this is today, right? So thinking about how price been moving, right? So looking at the candles, right? It can look a little misleading, where it seemed like it was a lot more action than what it really was. But when you really think about it, on Wednesday, the bulk of this humongous down candle happened at the news. Happened from 2 o'clock to 4. It all happened, most of it happened at the news, and then to go on. Let's mark it out and see what I'm talking about. We're gonna go from this high, and we're gonna go down to that low for a second. Then we'll find the correct low once we drop down a little bit lower. All right, let's set this for Monday at 9:30 in the morning. We're gonna go 9:30 a.m. on Monday, and we're gonna go, what was Wednesday, the 21st, and we're gonna put it right before the news at 2 o'clock. We'll put it right before the news at 2 o'clock. Boom. Now let's drop down low and look at it. See how close we came. Well, I do declare, look like we did a good job, right? So this is all the price action that we had done over Monday, Tuesday, from Monday morning, right? Because all this right here is Friday and Sunday, right? So from Monday morning at 9:30 up until Wednesday afternoon at 2 o'clock, we was in the same little range right here. We went up, we went down, we came back to about 50%, right? Came back to equilibrium, looked like, Let's get us a fib and check it out. So from the high to the low of the range, voila, what I said, we was consolidating right there, equilibrium. So we went from Monday morning, we went up, we came down, consolidated, dipped, came back up, and consolidated just before the Fed, right at equilibrium, right? Pushed up into a premium when the news came out, and then dropped it like it's hard, dropped all the way down, just below the same range. Then we pushed all the way back up into another premium, back into this fair value gap right here, and then dropped it like it's hard, dropped it. And we closed yesterday right here. We closed yesterday right there. So yesterday, that's what we closed yesterday at right there, right? So Monday through Wednesday afternoon, right before Fed, we went up, we went down, and then we came to equilibrium, consolidated, waited for the Fed, right? So the algos pushed it up, algos pushed it down. They set a range. The algos know the range they set, right? The algos know the range they set. Pushed it back up to equilibrium, right? Got to equilibrium and consolidated, right? Right before the Fed came out, pushed up into a premium. When the Fed news came out, dropped it down. Ran sell side right here. Pushed back up to a premium again, ran buy side. Ran buy side above all of this right here, got back into this fair value gap up there, and then dropped it again and closed out the day just below the area that we had been trading in for those few days. And then today, overnight, last night, we sold it down, right? Came back up in the morning, back up into that range. Did we hit that candle? What's the low on that candle? 38, 33, 50. What's the high on this candle? 38, 33. Just shy of the news candle. 2 ticks away from the news candle, right? At 5. That's the overnight high for tonight. Came back down, pushed back up. When the market opened up, dropped down, consolidated, pushed back up, ran buy stops, dropped down again. So that's why I say the market still look super heavy, because from the time that we were waiting on the Fed, we consolidated up in this range, then dropped it. Then we came back up, right, to the bottom of the news candle, right? Came back up to the bottom of the news candle, a stone's throw away from these up close candles, right? These up close candles are a potential order block because it's the shift in sentiment before a humongous drop, right? Stone's throw away, and then can't go any further. Couldn't go any farther up. And the day yesterday was an all, and then today was nothing. An all and nothing day. Because look at the continuation. This is the all, continued overnight, and then look at the low of the day, just barely below where we stopped with the overnight, with the Asian session. Before today started, the low before today started was 37.66.75, right? 37.66.75 was the low of yesterday, right? Before midnight. So the continuation of this big move took us all the way down to 37.66.75. And then with all of this funking around that we did today, the low that we made was 37.63.25. A little over 3 points, like 3.5 points lower was the low that we made. And then we closed at 37.71.50 within the dealing range of yesterday's entire range. We closed at the bottom end of yesterday's entire range. So the weight, the heaviness of the market is still to the bottom end of the weekly range, right? Because let's put it on the weekly calendar to see what I'm talking about. Right? Pop the weekly candle up. Now you can see it on the weekly candle. See, we still down here on the low end of the weekly candle. Still looking heavy. And it's looking like all eyes are on the July 14th low. We just about, the 14th low is 37.43.75, and today's low was 37.63.25. That's 20 points. What is that? 20 points. 63 to 43 is 20. 2 ticks up. So that's what that is, 19 and a half. Go 25 to 25, then go up. What's that? 19 and a half. What's that? 19 and a half. My math ain't math. 63, 25, 53. 63, 25 minus 43, 75. 19 and a half. I guess my math is mathing. 19 and a half points away from the July 14th low. That's why I say all eyes are on that. And if we look at the divergence chart, the NQ has taken July 14th low. The Dow has taken July 14th low. The ES is 19 and a half points away from the July 14th low. These two indices have already taken the July 14th low. Therefore, it's safe to assume that as close as we are to this July 14th low, the ES is next. That's why I say the market still looks heavy. The market still looks heavy. Looks to be setting up for taking out those lows. Once we take out those lows, will we get a rally on the last week of September? I don't know, Raggy. But once we take the sell side, let's see how far up we take it back to some buy side. And hopefully we go ahead and take the sell side tomorrow and they don't come up here with no foolery and be trying to do a pop to the ceiling, jump out of Vince Carter Friday, jump out the gym. What's up, 100? What's going on, Red? Red, I ain't seen you in a month of Sundays. What's going on, Massa? Appreciate for constantly posting on Al Gore. I appreciate you for constantly putting up on Al Gore's internet. What's up, Kevo? Can you go over internal, external liquidity and how to draw the boxes? Sure, Sam B. Soon as I speak to the Russells. What's going on, Russells? Still miss y'all other friend that was on the end over there at the football game or wherever y'all was, but that picture looked nice. He is risen. Amen to that. Sam B. Internal, external liquidity. Hey, y'all still ain't pulled up with what y'all want to look at here. So I should have looked away. Soon as I was about to look. How you doing, Zay? It was a red day, but when we get some green days, I should have. Soon as I was about to look away, that's what I saw. I saw that as soon as I was about to look away. Man, what I tell you. So Sam B, internal and external liquidity. This just the way Lil Timmy Rogers see it. This the way that I draw it on. I draw it on my charts, right? I draw it on my charts. The my analogy of it, right? When because I've always talked about buy side liquidity and sell side liquidity, right? I've always, what's up, Power Moves? What's up with you, Mike? What's going on? I've always drawn out buy side liquidity and sell side liquidity, right? Shout out PDub and Lex when they brought it back to my remembrance about IC talking about internal and external liquidity, right? When they was doing their video breaking it down, they was talking about internal and external liquidity. It's like I had an epiphany. And when they was saying, I pictured it as a box, right? Because the path of least resistance to go get liquidity is the internal liquidity, right? The internal sell stops, the internal buy stops, the internal fair value gaps, all the stuff that's in between, like the outside of the box, right? all the stuff that's within the dealing range, right? The box is the dealing range that you're looking at, right? So you can draw your box any kind of way you want to draw your box, right? But you want to draw it in a way that makes sense to the time frame or the time horizon that fits your trading style, your trade. Like, don't draw daily boxes at like weekly highs and weekly lows if you're not swing trading for like a couple weeks, or don't draw that monthly highs and monthly lows if you're not swing trading for like a couple weeks. If you're, you know what I'm saying, if you're day trading, don't draw like your month and your daily buy side and sell side liquidity way up at monthly highs unless the daily and the monthly high line up in the exact same spot. You know what I'm saying? Now let's go up to let me switch over. Let's switch over here and I'm gonna show you on Spylene since it's a little bit easier to see it on there, right? Y'all sing it with me. Spylene, Spylene, where you at, baby? Here I go. There she go. Hey, Spylene. Hey, how you doing? I'm sorry you couldn't get through. All right, so peep this right here, right? So let's put it up on monthly. I'm put it on monthly. Start at the monthly, right? So looking at the monthly candles, right? You notice I got the top, the monthly top of the box at September's high, right? The reason why I put the monthly top of the box at September's high is because that's the closest monthly high from where we're trading at right now. On a monthly level, that's the closest monthly high from where we trading at right now. Right now, we're at 374.22. Right, the closest monthly high is at 411.73, which happens to be September's monthly high. Right now, the bottom of the box, right, I put here on the June low. And the reason why I chose the June low is because I already had, I already had the July low marked as a weekly box bottom. And I feel like once we take out this July low, the June low is just a stone's throw away. So instead of having to move this, once we take out this July low and get this daily fair value gap under there, I still got the monthly low intact, right? That's why I chose the June low. And the second reason why I took the June low is because that's the last red candle that we had since from where we at now. You know what I'm saying? That the first reason was because that was the last red candle that we had since now. And the second reason was we so close to the July low. I already had that marked as a weekly level. So I just put the monthly level there. That's why I chose that. You could choose the July low if you want to. Now, move. Look, you can see the weekly line. Let's move to the weekly candles, right? So on the weekly candles, as you see, the weekly top, I got the weekly top as this week, the high of this week, because that's the closest weekly high from where we trade in it right now, right? The weekly bottom, I got as July 11th, that the week ending in July 11th. Do they end or start on here? I know on Ninja Trader they end. How is it on here? It's the beginning. Trading View is the beginning of the week. Ninja Trader is the end of the week. Trading View is the beginning of the week. So the week starting with July 11th. This is the week where July 14th low is in there, right? The date is actually July 14th, but it's the week of July, right? The first reason is because that's the first down close candle from where we trading at now, weekly candle. The second reason is we ain't got no more weekly candles lower than where we at besides the June. And I picked the weekly before I picked the monthly, right? And so and then the weekly top was this week, right? Now the daily, going to the daily, right? the daily and the top and the bottom, if I didn't say that, the top and the bottom of the box is external liquidity, but we'll get into that in a minute, right? So on the daily, right, the daily bottom of the box is today's low, because we just made that low today. That's the latest low we just made, and it's today's high because that's the closest daily high from where we're trading at right now, right? So that's the daily box, right? If we was up here somewhere, then I could have made the daily box yesterday. Or if we was like right here, up here above, I could have made the daily box the 15th, but that's the closest daily high. Now, what's the difference between internal and external liquidity, right? Everything in between the monthly top and bottom, every swing low, every swing high, every fair value gap, everything in here, right? This purple liquidity line, these green liquidity lines, these daily fair value gaps, everything in between this monthly and bottom box, that's monthly internal liquidity, right? Because the buy stops above the September 12th high are external liquidity on the monthly level, the way I got it marked, and the sell stops below the June 17th low is external liquidity. It's on the outside of the box for the way I got it marked. Everything in between here is internal liquidity on the monthly level, right? The path of least resistance on the monthly level is to come attack all of this. When we got up here to the top of the box, see the market been selling down, taking care of all it took care. It went, came down, made a gap, ran this sell side liquidity up under the September 6th low right here, kept on coming down, pushed back up a little bit, ran the sell side liquidity up under these relative equal lows from September 16th, right? Got these fair value gaps over here. This sell side liquidity up under the July 18th low, pushed through all of that is internal liquidity for this monthly box, right? So then you can have a box inside a box, inside a box, inside a box, because price is fractal, right? So on the weekly standpoint, we have came all the way down here, and now this is our weekly range that we're working in, right? From September 21st, what was September 21st? That was Tuesday. So also Monday, we opened up September 19th. Monday, we opened up at 382.26, pushed up. That was a bullish day. The next day we gapped down and kind of sold off, but hovered in the same spot. Wednesday, we pushed up, set a weekly high, right? On the weekly level, we set a weekly high. So on the weekly level, right, we came down, just say this was the start of the week right here. So this was, let's say this was the start of the week up under Friday. Friday's low was the start of the week, right? That was the start of the weekly low before we got all of this down here, right? Make that the start of the weekly low. We push up, right? Came into this internal liquidity, right? Because the top will be, just say the top up here somewhere. Came into this internal liquidity. It's a fair value gap. It's a swing high inside your weekly range. Then we pushed down and we broke into the external liquidity. When it break into the external liquidity and close outside it, the market showing it want to push down, right? So we kept pushing down, but our weekly line is actually down there. I just wanted to give an example of breaking through weekly liquidity, right? So now on the daily, right, our daily range, you can see our daily range. If we started here on Monday, you can see our daily range. I should have just waited for the daily to point out to break it through the box. Our daily range has been slowly expanding because we started out Friday, low was here, and the next high was up here, right? Let's just do that. So the closest high would have been there starting on Monday, right? That's locked. So starting on Monday, that's our daily range starting on Monday, right? So we start out Monday, push up into internal liquidity. What's the internal liquidity? We got a gap down, right? We got a full gap down right here. That's the most liquidity magnet of them all, because it ain't no price action going on in the gap, right? That's internal daily liquidity because it's within the daily dealing range, right? This is your low at Friday's low. This is your high at Thursday's high. So it pushed up into the internal liquidity because it's in between the dealing range, right? Went to the fair value gap and it closed. Went into the gap down and it closed there. The next day we gapped down. Now we done took internal liquidity up to the buy side. Then we took it and we delivered it external, outside of the dealing range. Boom, we delivered it outside the dealing range, and then we pushed back up into the dealing range, right? So now we still got the same. Now we moved the low down here because we made a new low. So now this is the dealing range, the same dealing range, because we haven't broke the buy side yet, right? So we just gonna leave it up there. You can move your move your top down here because that's the closest top, but I don't feel like moving it. I'm just gonna leave it there. We could theoretically move the top down here because that's our new dealing range right there. That's the closest high, right? Then on this day, on Wednesday, we open up, take external liquidity, right? We push up, take external liquidity to the top, then come, because it ain't much internal liquidity in here. It's, you know what I'm saying, above this high. Yeah, but we opened up above that high, right? So it ain't much internal liquidity in this little small dealing range. So we took the external liquidity because it's outside the dealing range, and then we delivered it below external liquidity to the bottom because the boxes are smaller. My box wasn't really that small, but that's just a long-winded way of explaining what's internal and external liquidity. I really hope I didn't confuse you. Now I can't remember what my lines was, so I'm just gonna hit. There you go. Right there. Saw that. What's up, Ramon? What's going on, Ramon? Ain't nobody else got nothing? Ain't nobody else got nothing? Is Mansa the only person? No, that ain't Mansa. Is Sam B the only person that pulled up with a question tonight? I appreciate you, Sam B, for being the only person to pull up with a question. When I said pull up with questions, because I get bored with just talking about the price action every day, and I want to answer questions. I had to run for the border. Who remember that commercial? Who remember the run for the border commercial? I appreciate you here to learn and share. Did you remember your questions this time? Hey, I'm going to drop the link in the chat one more time. If anybody want to pull up and share anything, if anybody want to pull up and ask anything, the link is in the chat. The link is in the chat. The link is in the chat. Hey, Zay, Zay, you still up in here? If you still up in here, put something in the chat. You still up in here, Zay? Can you explain wax on, wax off? Yes, I can explain wax off, wax on, wax off. Hey, Zay, what your target? What was your reasoning for your target? I can't remember what you said your target was. I forgot. I meant to write it down yesterday, and I wanted to go back and relook at my charts. You know how I like to do. Whenever you give me a target, I like to go back and relook at my charts and figure out how close that is to my target or why that wasn't even on my radar. Because it'd be helping me see stuff a lot of times. Wax on, wax off. T Baker, that's simple. Wax on, I ain't gonna say simple because I don't want to insult nobody's intelligence. But wax on, wax off, that's just the way Lil Timmy Rogers think about a gap fill retracement. Some people call it a gap fill retracement. I think ICT call it repricing and rebalance, right? So check out this, see this box right here. This is a daily fair value gap from the low on the 12th to the high on the 14th, right? There's no price, there's no share price between this green candle and this little itty bitty green candle, right? So when we start to trade back up to this area right here, we can just do it down here and we ain't got to go that far up. This this fair value gap just on top of our daily dealing range right now. This there's no shared price between the low on the 20th of September and the high of today, right? When we start to trade back up, as we since it's a bearish gap, and what I mean by a bearish gap, we made it on the way down. Price action was pushing so fast to the downside. We didn't get any daily buy side offer on this in this time frame. So when we come back and start getting the daily buy side offer, right, that would be the wax. What in the haberdashery? Let's try that again. That would be the wax on. Why is this doing this? Now I got the draw. I got the draw. If y'all don't want to see me draw, I appreciate y'all for pulling up. Thank you. Thanks for pulling up. Now I got the draw because it's not acting right. Share the screen. Share the screen. Right? So it's just my way of gap fill retracement, right? When we come back, this fair value gap right here, when price trade back up through it, that's typically what's known as a gap fill, right? Since it's a bearish gap because we made it on the way down. When we trade back up, that's a gap fill, right? I just call it wax on, like Mr. Miyagi, when you put the wax on, right? And then when we have the retracement, right, they call that a gap retrace, right? I just call it wax off. Call like when Mr. Miyagi told Daniel-san, wax on. He went up, he told him wax off. He came down. So when you're going up, down, laying the wax on, taking the wax off. If you're going down and up, laying the wax on, taking the wax off. Just like a paintbrush. That's all wax on, wax off is. Just gap fill retracement. Just, I don't know. I just got to say stuff in little clever ways that little Timmy Rogers, the voice in my head, understand it. You welcome. 3,500 by October 7th. What's that? SPX? 3,500 on SPX? 3,500 on the SPX. Did I shared the same screen? I'm tripping on. Oh, hold on, man. I shared the same screen. SPX. Whoa. Way down there. Way down there. You did you type that right? No, I was asking what target were you asking about? Oh, you had put something in, I think that's it. Whatever you had put in the chat. That's where a gap is on the monthly. Okay, it's a monthly gap there. Get out of here. So you said it's a monthly gap there? 3,500. Did you mean to type 3,500? $3,500. Oh, the top of right at the top of this order block right here. Okay. In 2 weeks? Yeah. If we stay bullish, if we stay bearish for 2 more weeks, I can see it. If we stay bearish for 2 more weeks, I can see it. But I got the sneaky suspicion that once we the ES take out this July low, I got the sneaky suspicion they're gonna push it back up to a premium before selling off anymore. I got the sneaky suspicion that once we take out this July low, let me get my because if we hadn't come so far, now let me say I say it like this: if they would have popped it up to drop it at the end of September, I'll be all aboard hitting that order block at 3,500 by the 7th. I'll be all aboard it, because if they would have popped it up to a premium, you know what I'm saying, this week, and then started selling it off next week, then I would be all for it. Like if they would have came in like I was talking about, they was gonna sneakily do, like come in like Monday, Tuesday, maybe even Wednesday, and get down. Like I was like, it'd be a dirty dog trick if they sell it down in the beginning of the week and then pop it back up to a premium at the end of the week. If they would have brought it down and pushed us back up, you know what I'm saying, pushed us back up to a premium. Where did we start the week off at? Let me see what we start the week off at. Okay, we started the week off there. Actually, here, right here. That's the end of last week, right? If they would have pushed us down and then popped us back up and then sold us off the last week of September and the beginning of October, I would have been like, yes, we definitely fun to hit that. But since they sold us down all this week and looking like we fun to finish out by getting this low, I don't see us popping back up tomorrow, especially since the Dow in the NQ already ran the July lows, and we ain't nothing but like 40 points away. You know what I'm saying? So we get down here, even if they run it and then pop it back up. But like once they run this low, I see us pushing back up to a premium and then dropping back down to take out this June low. You know what I'm saying? Since we done came all the way down. We done came all the way down here. It's to the downside. Ain't no and yeah, right now this still the yearly low because we ain't broke it. But as far as we've come on this retracement right here, this is the target. You know what I'm saying? This is the eventual target, even if we get back up into a premium to sell back down and get it. So I'm with the 3,500, but I would be really surprised if they did it in the next 2 weeks. I see us taking this out. You know what I'm saying? I'm thinking we're going to take out this low, pop up next week. You know what I'm saying? Pop up next week. Don't and maybe even push up in the beginning of October to get back up into a premium and then sell it back off. You know what I'm saying? Without taking out this high from the week of the 12th. You know what I'm saying? Push us down, you know what I'm saying, below this low, pop it back up, fail to take this high right here, get back up at least to equilibrium, maybe into a slight premium, and then sell it off and get down to that 3,500 because we done came so far. 32.45. Oh, you a big old bull here to learn and share. 32. Oh, your main target is, oh, you a big old bull, Zay. Way down there on the bottom. Oh, that's below. Wait a minute, that's at the bottom of the order block. You at the bottom of the order block. You way down here at the bottom of the order block. Oh, you a big bull. I mean, you a big bell. You a big old grizzly bell at the bottom of the what's the name? At the bottom of the order block. Yeah. I'm more in the mind frame of 34, between 3,400 and 3,450 in that range right there. 3,400, 3,450 in that range. If we get all the way down to 32 something, that's too close to this right here. We going under 3,200. If we got down to 32.45, if we got down to 32.45, like what 32.45 at? If we got down to 32.45 at the bottom of this order block right here, oh man, too easy. We coming down below these lows right here. We coming down below them September 14th lows, the week of September 14th. We coming down below that. You know what I'm saying? We may even push all the way down to this order block down here. We got an order block right over here on the week of June 22nd, 2020. We got an order block down there. And it won't even make sense to stop there, right? If we got down to 32.45, I see us going all the way down to this order block down here. You know what I'm saying? Anywhere from 31.50 down to 30.90. If we got down to 32.45, that's the area out. If we got down that low, the target down here at this order block right here, right? That's just the way I see it. And I ain't talking about no doggone October. None of it. This ain't this like that's like, you know what I'm saying, final destination type stuff. You know what I'm saying? That's final destination type stuff. I'm even talking about, like, you know what I'm saying, if we break below if we break a new low below the June low in October, right? I'm looking for, you know what I'm saying, a rally, because with the way the jobs going right now, with the way the inflation going right now, you can look at the way everything been, you know what I'm saying, the CPI numbers and all that. With the CPI, with the way all the prices of everything now, we're gonna be getting them numbers in, like, you know what I'm saying, October, November, December, right? So as long as the job situation stay good, as long as the inflation stuff stay good, the numbers stay good, the what's the name, the CPI and stuff like that gonna be coming out good. And then the feds are, you know what I'm saying, they may start to tailor their aggressiveness, you know what I'm saying, taper their aggressiveness. Then everybody won't be worrying about higher interest rates. They be focused on consistent interest rate hikes. They'll know, okay, everything getting better, so this is what the Fed's gonna be doing, and we ain't worried about them getting more aggressive, because the inflation, you know what I'm saying, what they doing is working. You know what I'm saying? So we gonna be getting all that information toward the end of the year. So if we make a new low in October, you know what I'm saying, if they get funky and we make a new low in September, then, you know what I'm saying, I see us coming back up to test one of these buys. The first target of the buy side will be above the week of September 12 highs. That's the first target of the buy side. You know what I'm saying? The second target of the buy side will be above the week of August 15th. You know what I'm saying? That's the first target for the upside, and then come back down, you know what I'm saying, and get down here into this deep, you know what I'm saying, down here where I was talking about. I could see us going down to like 34.40, 34.50. You know what I'm saying? Once we break below this low right here, I can see us actually sliding down to around this 34.40, 34.50. I ain't talking about for, you know what I'm saying, the beginning of next month. You know, the beginning of next month. And then, like, and shout out Zay what he said, then they announced the recession, right? And based off historical numbers, the same thing that like I shared with y'all what Dustin was talking about. By the time they announce a recession, you know what I'm saying, the stock market, dying off of the stock market is pretty much 80% of the way over. You know what I'm saying? Because all this dying we've been doing, you know what I'm saying? All this dying we've been doing here. Let's say we get down here to around, just say we get down here to 3,500, right? Just say we get down here to 3,500, 3,550, right? And then after all the news and everything come out, they announce we're in a recession, and then we slide down here to you know what I'm saying, 3,400, 3,450, whatever I said, 3,440, 3,450, even down to 3,400. The 80% of the run was over. This last little drop, you know what I'm saying, that would be, or even if we get down here and we start to recover, and then they announce the recession, because it been many examples where when they announced the recession, the bottom had already been made, and we had already started recovering in the stock market. Not saying the economy had got better, but the stock market had already started recovering because it had already priced everything in. Stacks, we never even noticed you was gone. They were just jokes, man. All this dying we doing is the recession. Exactly. You know what I'm saying? Exactly. It's like we already can feel that we in a recession. We already know it. Matter of fact, the recession probably over by now. Zay, you done put a whole dissertation up here. I skipped a whole lot of stuff you was typing in. I skipped a lot of stuff. We've been on here over an hour, man. I appreciate y'all for pulling up. Zay, I appreciate you for sharing your targets, giving me something other to talk about besides the price action that we did today. I appreciate you, my guy, as always. We gotta chop it up. We gotta chop it up here soon. Tell the wife and both girls I said hello. You know they say it's healthy and a good thing to talk to your baby while they're still in the womb. So tell the wife and both girls I said hello. How are you? Hey, my screen just went crazy. Did it just end? Are y'all still there? Are y'all still? Something just went crazy. I don't know if y'all still there, but something just went crazy. Y'all see, I can't even see my background no more. Me. Can y'all see me? Can y'all hear me? Something just went slap crazy. I do not know what just happened. Audio check. The mic's still on. I don't know if y'all can see me. This thing just went slap crazy. Oh, it's saying some error happened with the green screen. I don't know. It said some error happened with the green screen. I don't know what that means. I guess God did not like your comment. Lord, forgive us. Let me see. Can y'all still see me? Where YouTube at? Are y'all? I don't know. My whole computer just crashed. My whole computer just crashed. It say I'm still live. It said I'm still live. Can y'all see? It says I'm live. I don't know what just happened. I don't know how to end it. I don't even know how to end it. Mic check. The mic on. It say, okay, YouTube say I'm live. Okay, I'm back. It say, okay, YouTube say I'm live. I don't know what just happened. Hey man, Hey, on that, on that, on that, I'm done. I don't know what just happened. I don't know what just happened, but on that, I'm done. Hey, tomorrow, Junior got a game out of town that we not going to. So we're gonna do the price action. We're gonna do the overnight price action, and we're gonna do the weekly wrap up. We're gonna do the overnight price action, and we're gonna do the weekly wrap up. Since Junior got an out of town game that I'm not going to, we're gonna do the weekly wrap up at 6:30. We're gonna do it at the normal time since I don't have to pick him up and we don't have to go to a game. We're gonna do the weekly wrap up at 6:30. Y'all come ready to tell how your week went. Y'all been slacking. Don't nobody want to share how their week went no more. Tell a friend to join in. I came back and crashed it. See y'all tomorrow. Stay blessed. Stay blessed, everybody, man. I see y'all in the morning at 9 o'clock for the overnight price action. I'm gone.